In the year 2000, one investor read a single company's annual report and bet everything that it would go to zero. 14 months later, that company, Enron, filed the largest bankruptcy in American history. $63 billion gone. He didn't have inside information. He just read the parts everyone else skipped. A 10-K is the annual report every public company must file with the SEC. It's usually 100+ pages, and most people never open it. But hidden inside are 4 sections that tell you almost everything you need to know. Right, read the boring parts. That's where the truth hides. Before a single number, there's a plain English section called Item 1. It's the company describing what it does, how it makes money, and who it competes with. And here's the test: if you can't explain the business after reading it, you shouldn't own it. Buffett calls this the circle of competence. He passed on tech for decades because he couldn't read those 10Ks and understand the moat. Then he read Apple's, saw the ecosystem lock in, and built a stake worth over $150 billion. So the first question isn't is it cheap? It's do I understand how this machine makes money? If item 1 reads like a foreign language, that's your answer. Right, if you can't explain it, don't own it. Here's what nobody tells you. Companies are legally required to list everything that could go wrong. It's called Item 1A, Risk Factors, and management writes it terrified of lawsuits, so they're brutally honest. When you read these, you're looking for one thing: concentration. Does one customer drive half their sales? Does one product make all the profit? Does one lawsuit threaten the whole company? Draw, one big customer leaves, revenue collapses. Think about it. If a company says 40% of revenue comes from a single client, that's not boilerplate, that's a warning. The risks that repeat, that get more specific year over year, those are the ones that matter. Compare this year's risk section to last year's. When a new risk suddenly appears near the top of the list, management is telling you something changed. This is the section professionals read first. Item 7, Management's Discussion and Analysis, is where executives explain the numbers in plain English. And how they explain them tells you more than the numbers themselves. Watch the language. Great managers are direct. Revenue fell 12% because we lost a major contract. Bad managers hide. Revenue was impacted by evolving market dynamics and headwinds. One tells you what happened. The other tells you they're spinning. And always follow the cash. A company can report rising profits while cash is bleeding out the door. If net income is climbing but cash flow from operations is falling, read that section 3 times. Draw, profits up but cash down, read it 3 times. Buffett reads roughly 500 pages a day, and Md&A is where he spends his time. Not because it's exciting, but because it's where honest managers reveal themselves. Right, how they explain the numbers matters more than the numbers. Now the part that made our short seller a fortune. At the very back of item 8 sit the footnotes to the financial statements. They're dense, they're boring, and they're where companies hide the truth. In 2000, Jim Chanos read Enron's filings and got stuck on the footnotes about related party transactions. Enron was doing deals with partnerships run by its own executives. The company was, in effect, trading with itself to manufacture profits. So Chanos bet against it. Enron's stock went from about $90 a share to under $1. He was right because he read the pages the analysts ignored. The footnotes are where you find debt that's not on the main balance sheet, stock handed to executives, and accounting choices that flatter the numbers. Read them last, but never skip them. Here's the whole video in one line. The market rewards the people willing to read what everyone else finds boring. A 10K isn't a chore, it's the closest thing investing has to reading a company's diary. And remember, this is educational content, not financial advice. Always do your own research. Right, the reward for reading the boring parts is not losing money. What's the first company whose 10K you're going to open? Tell me in the comments. And if this changed how you'll research a stock, subscribe. Tomorrow we're breaking down how to spot an economic moat in under 5 minutes.